same as on account budget since it was their government. Having said that, there are a lot of changes which have happened. But before we hand over to two of our esteemed guests, Mr. S. Naren and Navneet Munot, let me just introduce my colleagues. So I have Sanjeev Arora, who's Private Wealth Head Practice for South, and I have Amit Gupta, who's basically heading up PMS, and he has done a stellar job. And my name is Manish Mehrotra. I'm representing ISEC. So without taking any more time, over to Naren to tell us in terms of how do we see this budget, how do we decipher, what is in it for people.
So, see, I've watched this government for about 10 years now. And I have seen budgets for about 35 years now. So basically, if you look at what has happened is that from the time, if you look at the budget in 90s, for example, they used to be in the evening, and they were all epochal budgets, if you ask me, because customs duty at one point of time used to be 100%. So 100%, you have to bring down customs duty to 10%. So just imagine how much you have to bring down tax. So those budgets were all very, very material and important. So from that situation, now slowly things have changed. And the budgets have become less important because there's no scope to reduce customs duty, for example, at this point of time. Then another set of things Mr. Arun Jaitley did successfully with launch of GST. There is no excise duty changes which is possible significantly in the budget because all that has moved to the GST Council. So when you have a budget, you cannot do any changes in GST. GST rates come under GST Council. So that has reduced the importance of the budget. So what you can do is only direct tax changes. So when people think that why is the budget full of what the government will do rather than anything else? Because that is what today the budget has become. It has become a statement of what the government will do, what kind of schemes they will launch, how they will do these things. Because many of the other things that the government could do is gone away to GST Council, and now there is you can't bring down rates from 10% to 0 in customs duty easily. So that is how things have changed. The second thing by watching budgets over the last 10 years is you have we have had one of the best macro teams in the last 10 years. They don't allow fiscal deficit to shoot up. They don't allow current account deficit to shoot up. They don't allow inflation to shoot up. So you have a situation where the government is always focused on macro. So most of the time when we are trying to think of a situation where the government will basically empty the government's coffers, those kind of things have never happened in this government in the last 10 years because they've always been very disciplined in handling finances. And see, you have to also see relative. If you see relatively to other parts of the world, things have improved so significantly. What is due to that, what has happened is that you have a situation where in all other parts of the world, the yields have gone up sharply. In India alone, yields haven't gone up sharply. China is the only other country where yields haven't gone up, and yields haven't gone up in China because growth has collapsed there. India is a country where growth has continued to be good and yields haven't gone up. In all other parts of the world, yields have gone up because fiscal deficit has just gone out of control. So they have kept things very good. How did it happen? Through continuous improvement in tax administration. So if anyone has traded stocks, it comes in that computerized statement which you have to file on July 31st. Nothing you can do. Everything has to be paid. If you have a bank deposit, interest is there. That comes in the statement. You have to pay. So things are just fantastic actually. Therefore, tax collection zoom. So this time they have increased the taxes slightly on capital gains and things like that because market has been too buoyant. They didn't know what to do. So to make it slightly less buoyant, they actually increased taxes on capital gains, on equity. So what did they do instead? They brought down gold customs duty. They said, okay, gold has done less than equity. So what can we do in return? We can cut gold. It's not that real estate was doing badly. They realized that real estate was doing okay. So they said, okay, let's remove indexation on real estate and then reduce the capital gains on real estate from 20 to 12.5. and it becomes so easy to calculate. They don't need to do anything. They just calculate the income input, and this whether 12.5 without indexation or 20 with indexation, which is better, no one knows. Some parts I'm sure which will be right. I have no idea. I'm no expert anyway. But so they basically simplified things. So what is the future? The future is that things are fine, except so the problem is not with the budget per se. The problem is that valuations are not cheap, and investor sentiment is very good. And consequently, we have a situation where the challenge is only valuations and sentiment. And it's a struggle for us, actually. When valuations and sentiment is a problem, it's a struggle for people like us. If the struggle is, and the irony, as some other people would say, is that maybe we were always cautious or something like that. But the fact is, we used to tell people do asset allocation. But if you look at a fund like multi-asset, even that kind of strategy delivered huge returns till recently. Maybe today gold would have hurt, but then frankly, even asset allocation strategies delivered very good returns over a period of time. And but it is a painful situation for us at this point of time, because we don't know what is cheap. Nothing is cheap. And everywhere, if we were giving 16p to a company, we start giving 18, then we start giving 20. And that is what we have been doing at this point of time. And that is what we are forced to do at this point of time. But is there a problem with macro? No. Is there a problem with the entire country's companies? No. Is it easy for companies to deliver super duper numbers? Answer is no. So if you look at many of the corporates, nothing great. IT industry may have delivered good share market returns in the recent past. But if you look at the results, compare year on year, it looks average. It is just that people thought they'll do even worse. So when they slightly outperform, the share shot up. So if you look at some of the consumer results, like the results will be average, but the share may shoot up only because people expectations are very, very low. So it is a confused situation for us as investors, because market valuations are costly. Macro is good, corporates are good, but valuations are costly. So you have to handle the valuations through asset allocation. So we have been advocating caution. We continue to advocate caution, and we'll try our best to manage money cautiously wherever we have collected, including in Energy Opportunities Fund, to the extent that we can be cautious. And that is the way we will do it. But that is the way we will do. Does it signify a problem for the stock market or the economy? The answer is no. And that is the framework under which we have to do it. And we advocate that, notwithstanding the budget was outstanding in my opinion. But despite the outstanding budget, we tell investors, be careful because of the valuation. And we would continue to tell people, think of the long term, be careful, continue to invest slowly over the long term. In case there is a setback, relook at it, and at that point of time, become much more aggressive than today. This is how we look at it, and we say, okay, and look at investing with a careful lens, not because there is a problem. If you look at many other countries, there are its own challenges, its own problems, and those problems appear much bigger. Unlike in India, where there doesn't seem to be problems, valuation seems to be the only problem. This is how we look at it at this point of time. So, is there anything else you really want to cover? Because fiscal deficit is comfortable. It is 4.9. Revenue is going up. As such, this government is not known for making some very, very large revenue estimates which can't be met. They have not talked much about disinvestment or something like that. Very easily, they can do disinvestment. So there is no challenges that they are not going to meet their estimates, in my opinion. They are in a very, very comfortable position to achieve all the estimates that they have told that you will do. So from all those points of view, I do not see any problem at this point of time that I have to really worry. And I have to tell you that there's a crisis ahead of us in this respect or that respect. There's no such crisis. Everything is fine at this point of time. happy, Manish, if you want me to answer a few questions or anything like that, and or is this sufficient? I'm happy.
So we can just take one question for the want of time from Amit, and after that we'll move to Navneet for his view. Amit?
Yeah, hi, Naren. So you are the pioneer of value investing in India. So as you rightly said, many sectors have already moved up. Now the point is the consumer space, which I think was lacking behind for the last 2 years now. Mostly we were investing in the industrials and all. Now we are seeing that the government has cut down on the income tax, some relief on the income tax regime in the new tax regime, and also some state governments also, where the BJP is also ruling. For example, in Maharashtra, we have seen some freebies giving. So now what should be the, our view of portfolio construction? I mean, from your perspective, shall we go more, with a high weight in the consumer now and leaving behind the Capex?
Very complex question. See, in my value discovery fund, after a long time, I bought consumer stocks, and in a cigarette block that happened, we were one of the largest investors. And this is published information, so I'm not telling you anything which is classified. But the stocks have gone like rocket. Today, some of the consumer stocks have up 25% in 1 month. And so what happens in today's market is whatever you're talking about gets priced in so quickly. So it is not as if something is a bargain at this point of time after the move. And I can't see if there was such a bargain at this point of time, which I can tell you everything is attractive, so attractive. So there is no such bargain. There is only something that there's a long-term structural story in India. But my view at this point of time personally is there is no bargain in Indian equity investing at this point of time. And if there were a bargain, I would be very happy and I would tell you. But there is no bargain, except that you are buying into a good story, which is not cheap. So that is why you do patient investing, you do SIP, you invest gradually for the long term, and if by chance there's a setback due to some reason, at that point of time, evaluate and do big investing at that point of time. But if you are invested old, and at that point of time, that is when you stay invested with that money. And for the monies that you have given us in energy opportunities, that is what is where I have the biggest challenge, and that's why I decided to be the fund manager. Because it is not the easiest job to do for me as a fund manager. This is how I think about it.
Thanks, Naren. Thanks for this. This was short but very, very crisp answer. Thanks for that. So Navneet, coming to you, just to introduce Navneet, he has held 2 biggest AMCs.
Thank you.
Thanks, Naren. So Navneet was the CIO of basically SBI AMC, which has recently lost 10 lakhs, and he had taken it to where it is today. And now he's heading one of the biggest AMCs. He's a chartered accountant and has lauded many degrees. So Navneet, how do you read this budget? I'm saying a lot of reading in between the lines, or is it like basically whatever was on account budget, you can just see the extension except for one point here and there?
Thank you, Manish. So, I mean, you have to see the backdrop of the budget, right? I mean, this is a third term of this government, and you have to ensure that coalition dharma is followed. So obviously, there are parts of the economy or parts of the country where you need to take special care, and I think government has done a good job without being, I mean, in the market parlance, without being trying to be populist or neglecting other segments of the economy. The second thing, you have to see the backdrop that India is growing well, right? I mean, the last print of the growth has been 8%, but you split that growth, investment doing relatively better than consumption. So then you have to now focus on how to boost consumption also, because that is growing at a lower rate. Within the investment, mainly driven by the government capex, but private sector yet to take the full baton of sustaining that growth on the investment cycle side or private capex side. So you need to ensure that you support them enough through a variety of things so that they feel more confident in investing. And government has already done the heavy lifting over the last few years. Our overall capex in FY20 was, if I remember correctly, 3.35 lakh crores. Today it is more than 11 lakh crores. So that has tripled in the same period. To put that number in perspective, Manish, in the same period, the revenue expenditure would have gone up by 55% or so, while the capex has like tripled. But I mean, you have the limitations in terms of fiscal prudence, and as I said, that you also have to support other parts of the economy which are not doing as well, which is consumption. Within that, if you split between urban and rural is not doing as well relative to urban. So then again, you have to have higher focus on the rural growth. If you split, I mean, economy in different way to look at sectors, agriculture, manufacturing, and services. Manufacturing, I think over the last couple of years, government has given a lot of soaps, particularly the PLI, lower corporate taxation rates, and few others. But on the agriculture side, growth has not been good, and I think you need to provide support to that. So first part of like the budget, a couple of minutes were spent on how to increase productivity, how to leverage the power of technology, particularly the DPI for agriculture, how to ensure more credit to the agriculture sector, and then I mean focus on couple of high-yielding crops, so on and so forth. Then on the I mean, if you split the growth in like various parts, as I said, that particular the parts of the economy which have not been doing well have got more attention, which is what the logically finance minister is supposed to do, and won't speak much, which so much has already been discussed and would have been shared. Now I'll talk about one particular thing that if you look at the budget finances in last few years have improved mainly on account of 3D. The first D is a digitalization and the design of the GST, or let's say because of the digitalization. Overall, tax revenues have been going up. That has helped in improving the government finances. The second D is a DBT, the direct benefit transfer, which has reduced the overall leakages on the revenue expenditure side. And the third D is the dividend income that government has got from RBI as well as from the other PSUs, which has been a record amount. I think the fourth D that can help the government over the next several years is the disinvestment. I'm sure in ICICI Securities, we have been engaging with the DPAM and the government that I think there is a lot more that they can do on asset monetization, on divesting stakes in PSU, given where the valuations are. So I feel very comfortable over the next several years on the fiscal consolidation. Why I'm talking about it, some people might say, "Arey yaar, 10-20 basis point mein kya fark padta hai, 5.1, 5, 4.9." But this is very critical for the long-term macroeconomic stability, long-term financial stability. Now that we are getting a lot of money from global investors in the bond market, it is very important that we keep our macro stability or the financial house in order. And this will go a long way in increasing the confidence of the global investors. This is good for the currency. This is good for the financial sector overall. So on that perspective, I would give full credit to the government that even before the election in the February budget, they did not do anything to rock the boat as far as fiscal prudence was concerned. And that has been the track record over the last 10 years. And I think the long run that will keep us in good stead. And now you combine the fiscal prudence with the monetary prudence, that despite the fact that inflation has come down, growth has been decent, and RBI continues to sound very, very cautious because they want price stability. They want to anchor the inflationary expectations well. And in the long run, as an investor in any asset class, whether you are in equity, whether you are in bond, it is very important that policymakers continue to focus on the overall prudential policies. And I think that fact is underappreciated because a lot of the time goes and maybe the small changes in taxation or the small changes here and there. So I just thought I'll make that point. The another interesting part is if you see that many announcements here and there, but one or two themes underlying, which again don't get talked about much. One is, I think, a lot of focus on formalization of the economy. Now, just connect few dots here and there. They might have been in different parts of this budget somewhere. So the entire job creation thing, if you have heard it right, is all through like trying to be in formal sector, right? I mean, EPFO में अगर आपका subscription है, then you get that whatever the government incentive, which means if you are in EPFO there, you are in formal sector. Simplification of the taxation structure. And I'm looking forward to, because she used the word comprehensive review of the Income Tax Act 1961. So if you do the simplification of tax, the tax net goes up, more and more people start paying. And you combine that with the GST and it's very simplified, आपका tax easily file हो गया, then I think it is very good for the long run. If you see like the reduction of tax in gold and silver, somebody asked me कि यार ये तो आपके लिए competition हो गया. Now people will invest more in gold and silver. I said, no, I mean, this is basically to bring the informal part of the gold and silver import into the formal parts, because that's like a large market. The bullion market is a large market where there is still, I would say, informal economy exists, how to bring that into the formal side. Even all the talks around MSME was more about getting them easier financing, but that easier financing is only through the banking system, right? Or an NBFC system. Again, you bring them to the more formal sector, which I think is very, very interesting aspect, doesn't get talked about much. And second is the digitalization. At various places, she talked about, using the digital public infrastructure in the context of IBC, in the context of even the next gen reforms, ki law, labor, capital, taxation, what we have seen on financial inclusion. I think over the next several years, we'll see a lot of path-breaking things by using the digital public infrastructure that India has got. So digitalization of the economy and formalization of the economy. These two are like very, very structurally very strong moves which are happening, which are very good for the longer term macro picture. So I just thought I'll add some of these points over and above what Naren had already covered. But happy to discuss anything else.
Sanjeev, you had a question for him. If you can shoot now.
Thank you, Manish. Thank you, Navneet sir. I think you spoke about everything. One question I thought I had was, in the budget, a joint venture has been announced between NTPC and BHEL on a AUSC thermal power plant of 800 megawatts. So my question was, how do you think the budget supports the transition to green energy?
No, very important point that you picked up. And I think, in fact, I've created this acronym for today's budget, which is like SIP, because I'm mutual fund industry wale. So everywhere we see things from an SIP lens, which is like sustainable growth, inclusive growth, and prudence. So prudence, I think I've talked earlier. There's a lot that's on inclusive growth, the entire thing on job creation, on youth, on women, on rural side, and all is about the inclusive growth. You picked up the right point. There's a lot of focus on sustainable growth. Climate change is like one of the biggest risks for lurking, not only for India, but for the global economy, but more so for India, because we are at $2,500 per capita. We have a long way to go. So the carbon intensity of the economy logically should only increase, right? So, but we have a challenge at hand, and we cannot afford to grow the way China has grown and just destroy the planet. And I think you'll be borrowing a lot from the future. So at the very early stage, you have to ensure that growth is very sustainable, and that's where the energy transition is very critical. And not only the energy, while you talked about the energy, but even on the transportation side, even agriculture side, identifying areas wherever there could be risk on climate change. How do we address that at early stage? There was some discussion on the nuclear side today, and both the wind, the whole 1 crore homes getting that rooftop solar panel, so that to that extent, I think the on the housing side, if electricity can be provided through the renewable energy, all of these are really very, very good steps.
Thank you.
So, thanks. Thanks for this answer. Mohit, you also had one question. So Mohit came in slightly late. He is also one of our zonal heads who tried to practice in North. Mohit, if you can shoot your question.
Thank you so much, Manish, and thank you so much, Navneet sir, for, I came late, but still I heard you a lot. What my question is that, to your mind, maybe through this budget or otherwise as well, because you would have been practicing what could be the sectors which could be beneficiary in this from the perspective of NDA 3 going forward for next 1 to 5 years.
So,
Because why I ask this question, because when I meet clients, they ask me, Mohit, defense did exceedingly well, we made money. PSU did exceedingly well, we made money. But that transition, I have met you earlier, maybe you don't remember. But at that point in time, it was growth stocks which were doing very well, and they were doing very well for a decade. Certainly, in last 5 years, apparently, I think there was a tactical shift which happened in the money making aspect for clients was towards PSU, defense, and other sectors as well. So, to your mind, from here in this NDA 3, what could be, and also aligned with this budget, maybe what could be the sectors where one should be aligned to in terms of the portfolio?
Given the way information spreads today, and everybody is sitting in, a small place in Punjab or Uttarakhand or anywhere, you get information very fast and then you start reacting. Technology has made like a stock market in everybody's pocket. And then you've got the Twitter and Telegram and WhatsApp and everything. So everything gets priced very, very fast, be it the institutional as well as the retail investors and global investors. I think they've discovered India very, very well. So everything gets discounted very fast. And you talked about, for example, the defense. I think in a short period of time, a lot of returns have got discounted in a very, very short period of time. I remember little over a year back when we did the NFO. Maybe within few months, I think market was up like 30-40%, and we were thinking, is the timing right? But then we thought, no, it's a long-term theme, and over the next several years, I think it should do well. But then in the next 1 year, we got like over 100% returns, right? Again, so then of course a little bit of it would have been borrowing from the future, and that's why we moved to only SIPs as a subscription, and then now we have stopped that also for the time being, just to ensure that valuations are reasonable if we take more money in the lump sum form and even in the new SIP creation. So when you say the NDA 3, I don't think that today one can take that call for next 5 years, because there's a possibility that the themes that are looking good, suddenly they may get discovered in a very, very short period of time. Interestingly, I'll give you this example of FMCG. Over the last, or maybe the broader consumer, that the view has been that government has done a lot in last few years. Credit to them to support manufacturing. I talked about the PLI, maybe whatever opportunity that has come to us from China 1+ perspective, the reduction in tax rates for companies or for new projects, and many other things that the government has done to the improve cost on the logistics side, on the power side, and many other things. Now, but consumption hasn't done as well. So there have been expectations that government will surely do something to support the consumption, particularly the rural consumption. And look at like last 1 month, nothing has changed from an earnings trajectory. You meet any FMCG company, they won't say that volume growth from 0 to 2% has gone to some double digit. Not really. But you see the stocks have run up like 15, 20, 25%. So my point is that market starts discounting very fast. And I think the focus in NDA 1 or 2 or 3 has to be on bottom-up stock picking, because you have to see what is expected and what is like kind of priced into the price, and then constantly there's a job of the fund manager. And at our end, we are a lot more bottom-up than taking some of these large macro top-down calls.
Sure. Thanks a lot, Navneet. So let me also introduce Bharat. Bharat heads our products. Bharat, if you can
Hi, Bharat.
some light of in terms of what were the questions which were in your mind.
Yeah.
Navneet.
Right. So thanks, Navneet. Navneet, I just wanted to understand. See, the capital expenditure, they kept it at the same level, 1111. What was there in the interim budget, which was continued. Do you felt that the entire fiscal space which was available might have been used little bit more towards this capex, and maybe a fiscal prudence of, as you rightly mentioned, how does it make a difference whether it is 4.9 or 5.1?
Yeah.
Do you think that actually this might have been actually better money multiplier or a GDP multiplier? Have this money might have been used for capex, and rather than giving away 0.2% to a fiscal consolidation? Anyway, there was not a hurry on that, sir.
It's also about the deployment and the execution, right? And the another thing, but to me, I think I'm happy with 4.9, to be very honest, rather than having that 0.2 additional, because sometimes I think from an overall capital allocation perspective, I think that prudence is good. And over a period of time, we have to keep in mind that when your economy is growing at 7, 8%, you don't have fiscal deficit in 4, 5 handle, right? It has to be in 3 handle. Till few years back, a 4% fiscal deficit would have looked very high because we were moving towards that 3 handle. Of course, the COVID happened and it changed things, and the whole FRBM has got deferred now to maybe 2027, 28. But the trajectory is very clear. We have to go to 4.5 and then we have to go to 4. The reason is India's public debt to GDP is 81%. It's one of the highest in the world. I mean, within the emerging markets, of course, people can say developed world has much higher, US has much higher, but all said and done, they are blessed with a reserve currency. We don't have that. Our borrowings may all be like domestic borrowings. It may not really create a big trouble in the short run, but in the long run, it takes away a lot of flexibility. God forbid if you have something like a COVID again, God forbid if you have a big geopolitical risk. I mean, government needs to borrow a large part of the money, and then you are from the savings pool that you have. If government borrows too much of money, then less is left for the private sector. So you are crowding out the investment. So from that perspective, I think what they are trying to do is like really balancing these two. The other side is, as I mentioned earlier, Bharat, that the Capex has gone up from 3.35 lakh crore in 2020 to 11 lakh crore. This is like tripling of the central government Capex, and the revenue expenditure has only gone up by 55, 56%. Of course, the more the merrier. But what we need to keep in mind is that collectively we are spending so much of time, right? We are doing this webinar the whole day on TV, few days before, few days later, so much discussion on the central government budget. But if you add all the state government budget, they are bigger than the central government budget. But people hardly talk about it, right? Maharashtra ka budget tha, except that, the thing about the cash dole out and some of those schemes, had that not been there, it wouldn't have even like appeared on the front page of any newspaper. We hardly read about it. A lot of that capex has to happen at the state government level, and then at the even at the city or the town level by the municipalities and all. So over a period of time, what we need to ensure is that government does its bit, but then you create an environment where the private sector also takes over from that. And beyond a point, in fact, in US, on a very lighter note, I would say this, there's always this debate about like government spending more versus leaving the money in the hands of private sector. So एक बहुत famous quote है Milton Friedman का, that if the federal government is given charge of Sahara Desert, there'll be shortage of sand in few years. तो बेटर ये है कि पब्लिक को पैसा दे दो. अगर आपके पास ज्यादा पैसा है तो कॉर्पोरेट्स को दे दो, बिजनेसेस को दे दो, middle class ko de do. They know how to use that money better than you spending on your own.
I appreciate. Thanks, Navneet. See, the only thing is that, as you know, I think the first part of the entire budget was also focused towards job creations and ultimately the entire demographic dividend which we are going through and should not go on the other side. I just wanted to check with you that do you think that what she is doing will ultimately result, because looks like a program or a long-term sustainable path what they wanted to get into, but is that sufficient, or is just going to be just because asking somebody to join and for the first year and the first month I will take care, does that really will work in sense of this, or do you need more on skilling rather than just doling out some money as a first year joining bonus kind of a stuff?
No, so one, that we have to bridge the gap between the employability and like, the education. So people are educated, but they are not employable from a private sector perspective. You meet companies, they would say that we are not getting the right talent, and you meet people who are saying I'm not getting the right job. And I think what we need to bridge that gap, and they have tried to do something about it by, incentivizing a 1-year internship in the corporate sector, so on and so forth. The other thing is also, I think it also shows, as I mentioned earlier, that how to use like every penny with a multiplier effect. Now, when you say that I want private sector to create that job and I will incentivize, versus you say that government will hire another 10 lakh people or 20 lakh people, or I'll just give you a complete cash dole out. I would actually prefer that working with the private sector. And many times in the budget, you might have heard the word like public-private partnership. After like several years, we are hearing that word in different contexts. We always thought public-private partnership was only about physical infrastructure, maybe a road or whatever, anything like that, a power project or something. But now we are hearing about public-private partnership in a more broader sense, that even for employment creation, we need to work together if society needs that, a bigger thing. So from that perspective, I feel positive. The another thing we need to keep in mind that AI is like a big revolution. I mean, I've written about it 2 years back. This was my person of the year annual thing. This is a very big transition. This is to me, as I mean, the agriculture was the first revolution in human history, which kind of had its impact for thousands of years. Then you had the Industrial Revolution, which had its impact over the last few hundred years. Then you had the Information Revolution, which is changing, the way mankind has been over the last couple of decades. And now you have the Intelligence Revolution, which is the AI, which will have an exponential impact in a very short period of time. So agriculture took like thousands of years for it to really display its full impact. Industrial Revolution, few hundred years. Now information revolution, few decades. This is like we are talking about world changing in a 10 years time. Now, how does the whole humanity cope up with this? Now you'll have like a lot of corporates saying that I want to invest more in AI. I want to invest more in automation. If you are a manufacturing company or a services company, then what will happen to people who got skilled in the previous era? How do you utilize them in the productive way? So I think the job creation in this new world where there are these kind of changes happening is going to be a very big challenge, but we have to find answers to it. And particularly in a democratic environment, when you have such a large demographic dividend, you cannot afford that large number of youth is not able to get employed in a very productive manner. So I think there are many things that we have to do, but I was very happy to hear that at least some thoughts. In fact, some people have criticized that this is not the best way to really create jobs on a sustained manner, but just recognizing the challenge, the magnitude of the challenge, trying to do things, also, putting responsibility on the private sector that it cannot be alone the public sector or the government की वही नौकरियां देंगे, आपको भी कुछ करना पड़ेगा और साथ में कुछ करते हैं. I will incentivize you to do that is a very good thing.
Thanks, Navneet. So, Navneet, this year we were seeing elections of almost half of the world population, right? And US is the next one. You have seen what is top secret things happening. So, from that perspective, people want to know whether this budget could have done more allocation in terms of defense or any other sector which is missed.
No, I think that's a journey. Government has done a lot in last couple of years for indigenation, for many things on the defense sector, and from like being one of the largest importers in the world, government is preparing itself that how can we become an exporter given the opportunity. Europe is going to invest a lot more in defense. Japan is going to be one of the largest defense importers from like almost nothing because they were so dependent on US. And now, particularly given the whole election noise in US, and if Trump wins, then the whole alignment can change dramatically, and every country will have to invest a lot more in defense given the global geopolitical environment. And in given that, there are a lot of opportunities for India. What I mean, again, as I said, that आपके पास एक certain wallet है. I mean, you have to allocate to like 20 different things, and how do you kind of like optimize that? At the same time, there is a limited, borrowing ability. So then you have to like allocate rightly and ensure that you have multiplier effect on wherever you are spending money, and that is what they've tried to do. And by the way, this whole maybe just digressing, and if the point was on, let's say, the elections and the market impact, market always gets it wrong. I'll give you 2 or 3 examples. Like on again this election result, if you remember that day, we were down thinking that it's a coalition government, and after that market has gone up. And to the budget, did you really feel that it's? I mean, there's like full continuity in the way budgets have been. Maybe I mean, rhetoric would be different, but otherwise there is like continuity. Same thing I remember, like Trump versus whatever it was, Biden yesterday or maybe Kamala tomorrow. In US, I remember 8 November 2016, market fell sharply because Trump had won the election. It was a great next 12 months. I mean, 2016 June, Brexit was like such a big fear. And when the Brexit happened, against market's expectation, the next 1 year FTSE did very well. I mean, cable did very well. So some of these things, I think we just kind of like shouldn't pay as much attention to as we end up paying.
Sure. Amit, you had few questions. If you can take over.
Yeah, thanks, Manish. So, hi, Navneet. So, I mean, as you rightly mentioned, about the youth and connecting with the private setup now, the first time we are seeing the government is trying for. Similarly, to push the smaller industries possibly, I think the e-commerce, the TDS now, they are cutting down. Second, they are also abolish the angel tax. So, your comments on this, that how much it is going to push now through these efforts?
I think everything, see, government, because on the physical infrastructure, they invested. To create the digital public infrastructure, they invested. On social infrastructure, there's limited amount of money for education, healthcare, skill development and all. What I think India is trying in a very unique manner is how do we leverage the power of the private sector on all of this? So we created a digital public infrastructure, but the beneficiary could be new business models. Maybe the way fintechs have come, or agtech have come, or edtech have come, or maybe a Zomato or Swiggy or an Ola, or maybe a variety of other businesses have developed. And now this removal of angel tax and maybe promoting more entrepreneurship is like critical. Same thing on the social side, that beyond a point, I think government will have limited amount of money, and that will be like, how do we encourage the private sector to play its role and make a make a more profitable model of like, delivering public, good quality goods and services to the people at large. So from that perspective, I think any of these things are very good. Also, as I said, from a mindset perspective, so 5 years back, 2019, right, when they cut the corporate tax, that time a lot of people were saying that to boost consumption, they should have actually cut the personal income tax, or maybe should have increased the welfare spending rather than cutting the corporate tax. But the mindset was that let corporates have more money in their pocket and let them kind of like do the capex and create jobs, rather than government having like more money and then distributing it to different parts. Yeah.
So I just make sorry.
Yeah.
Amit,
So
continue.
just couple of questions. One is on the buyback tax that they have announced. So now it's almost equivalent to the dividend tax what is there. So how do you see on the cash-rich companies, possibly IT companies, which were already struggling? So that is one question. So then I will ask the next question afterwards. First of all,
as a capital market investor, last several years, actually, the number of changes that have happened continuously. And I just hope that finally we get a structure which is stable, which is equitable, and which is kind of like more predictable. I mean, people are kind of finding various ways. You didn't have any tax on dividend income. Companies were paying it. Then we shifted. Then people thought, okay, buyback is another way. Now buyback is taxed. Earlier, we had capital gains tax. Then we said, no, replace it with STT. Then with STT also capital gain tax came, and then the rates have been kind of like tinkered with and all. I just hope that once and for all we kind of like have a clean slate and put that ahead, and then every year we don't have to see more and more changes. Yeah. But my view is always, because what happens that when we talk about the capital gains tax or buyback tax or dividend, it always comes across as like we have a vested interest. My view is that as a citizen of the country, if you ask me, as a macro practitioner, I think the capital market participation should not be looked at from a narrow perspective of rich people making money and we need to tax more. My view is that in India, if we have to create more social security and a retirement security for a large number of people, Government of India would never have the luxury of providing that the way European countries or developed countries do that. The entire population will have to invest for the long term through SIPs in capital markets to get inflation beating returns, so that they can create a retirement corpus, retirement nest. And for that, any kind of fiscal incentive or any kind of policy nudge is actually very good for the government, even for the long-term political stability, to be very sure. Because over the next 2025, we have this limited, I would say, window of, let's say, this demographic, the best of the demographic window, 20-25 years. And in this period, when we go from $2,500 to $10,000-$15,000, if large number of people are not able to invest in a sustained manner, and you provide the tax incentive, we'll have the largest number of old people also after 25 years. And there could be like a lot of political and social implications of that. So unfortunately, that part get missed, and we only look at कि अरे यार ये तो बहुत पैसा बना रहे हैं, इनसे थोड़ा और ले लो. And it's a
So,
very smart part of the population. It's always look like okay, थोड़े से ही लोग impact होंगे. मतलब all said and done, there are only 4.5 crore investors in mutual fund, and maybe if you take all the demat account at unique level, maybe 8-9 crore. Active will be less than that. So okay, it's a small part of the overall population, rich guys, and they need to pay more. But I don't think that's a right way of looking at it.
so just last question
Just
from my
one,
side.
just one.
Then
I
I
have
will
to make a small announcement. So a lot of you are asking individual stock questions. In this forum, we will not be able to ask Navneet individual stock questions. You can ask about macro sectors, but individual stocks questions we will not be able to take in this forum.
Manish can answer that.
Navneet, over to you.
Yeah, thanks. So, Navneet, last question from my side. See, central government state, budget came and now it is over. 11.1 lakh crore capex from the central government is fine. So, from the sectoral perspective, defense, railways, the same kind of budget has continued. Now, from the state capex, because my worry goes to the state capex, when we are seeing that the ruling party, in a certain state, they are announcing a lot of freebies. You have state elections now. That means somewhere the competitive scenario is coming up, right? So will it sacrifice some of the state capex which could have gone actually, in something other productive? So your take on it.
And I mean, you're absolutely right. I think what one of the big one of the best thing about India has been last few years is the cooperative federalism, through which I think all the states came together and we implemented GST. And my expectation was that we'll create a similar table for some of the other larger issues where state governments have a bigger role to play, like agriculture, like land, like maybe even the labor. The central government has a very limited role to play there, and the GST formula or the GST template of putting everybody on the same table and finding a national solution in the larger interest of the country, where there will be some small loss for one state and some small gain for one state at a particular point of time will be neglected, but the larger interest of the long term of everybody, because then together everybody will be a bigger winner, will be looked at. But if this kind of competitive environment of doling out more cash is there, I think it's not good for the long run. As I mentioned earlier, central government is trying hard to be on a very, very prudent path from a fiscal consolidation perspective. Those gains can be negated if we have more, I would say, a higher deficit from the state governments. And I just hope that there have been like experiences where some of the state governments tried doing it before the election and they didn't get elect. I mean, they didn't come back. So the model is yet to be tested whether these things really result in electoral gain. And I hope that somebody does a high quality paper to show that this actually doesn't help you.
Absolutely right. Thank you.
Thanks, Navneet. I think we are running out of time, but one last question, which I looked at the entire jugglery. So people are saying, how do you see valuations of the market, and when do we see 1 lakh on index side?
1 lakh kitna hua? 25% from here. So you can calculate. I mean, if let's say what the earnings growth over the next 2 years, and if the P doesn't change, then it's not too far. See, in the stock market, you return money from three sources. You have earnings growth of the companies, you have dividend yield, then you have change in PE. And the change in PE, incremental gains are going to be limited, or rather hardly any. I think the market is very fairly valued, or there are pockets where there is froth in valuation. There are pockets where they are reasonable. Dividend yield is very small in India. So large part of the returns over the next 3, 4, 5 years is going to be purely from earnings growth. And that's why one should not extrapolate the returns of last 1, 2 years and need to moderate the return expectations. But if you're a 3, 5 year investor, you'll be rewarded well, because the overall economic growth trajectory, the overall corporate earnings growth trajectory is looking pretty good.
Sure. Thanks, Navneet. Bharat, the closing remarks from your side.
Yeah, thank you, And thank you, Navneet. And I think the bigger take for us is it's a continuity, as you mentioned. Some tweaking here and there, just to make sure that the energy and the entire ecosystems get driven to a particular thought process. And I think the budget again is just 6 months away. And I think she promised that comprehensive review within next 6 months. Hopefully, in the next budget, we'll have a comprehensive review of taxation as well. But yeah, thank you. I think it's a continuity is what I'll take away from this discussion with you. Thank you.
Thank you.
Thank you.
Thanks,
Thank
Navneet.
you.
Thanks, everybody.
So,
Thank
yeah.
you.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.